one more second. Hello, everyone. Good afternoon. We are here to do week 5 recap of our fall number 1 Best Trader competition. My name is Carolyn Hale. I'm the director of marketing at DAS, and we're here with Jill Malandrino, who is the global NASDAQ's global markets reporter. Jill, did you have anything that you would like to say?
I think we could kick off with what we're looking at from a macro picture and some of the feedback that I've been getting with portfolio managers and investment strategists who've cycled through my show at MarketSite over the week. Clearly, U.S.-China trade talks continue to be the theme. It's essentially trumping everything that we're seeing taking place in the marketplace. Even yesterday I thought was a great example, something that I was covering and following. Revenue results from chip makers were out yesterday for September. And that typically is a big event as the semiconductor space will trade around that. And they were all up yesterday on rhetoric that there was advancement with U.S.-China trade talks, and nobody paid any attention to the results that were coming out from Taiwan Semiconductor, UMC, IMOS, ASX. For example, Taiwan Semiconductor, their revenue results were up 7.6% in September. Now that headline number looks good, but it was 21% in June, 14% in July, 16.5% in August. So you're seeing that decline there. And that did not impact the chip space at all, because everything's really predicated on what's happening with the U.S. and China. I think that's something that we'll continue to see. Even though we're coming into the thick of earnings season, you would think that fundamentals would come into play more. But I think really what the concern around that is that there's so much uncertainty around global trade policy that I don't think corporate guidance is going to be clear. And the trading action that we've seen that's very choppy, very algo-driven, very hinged on what comes out of this administration, whether it's a tweet, whether they're meeting with their counterparts in China. I think that's really going to continue to be the theme. Other things we'll be watching next week, October 16th. Actually, let's start with October 15th. The tariffs are set to increase on Chinese goods, barring progress with trade talks. Who knows if that's going to happen, if that will come off the table in exchange for something that China will give the U.S. So again, there's really not much advancement in terms of the talks. Moving to the U.S., October 16th, we have U.S. retail sales. That's going to be interesting as, there's slowing growth in consumer credit, rise in auto loan delinquencies. So I think it's going to be really important to see what the strength of the consumer looks like, especially since they're 68-70% of spend with GDP. So outside of China, those are going to be the macro things that we'll be paying attention to. Of course, you have the Fed October 30th, and then the Brexit deadline on the 31st. So regardless of the fact we're coming to earnings season, I really think that these macro headlines are going to continue to play out. Now, does it make it challenging for longer term, long only, or even short funds for that matter? Yes, because with a very algo driven environment and the market being so sensitive to headlines, positioning really does come into play. As a longer term investor, I don't think there's as much to be worried about. I think these opportunities, whether it's on the up or down side, are certainly there if you have the opportunity for long term. But that's what I think the macro landscape looks like, certainly through the end of October.
Are you seeing, based on the investors' moves at the moment, that the outlook, or at least according to them, or the movements in the market, make it seem like as if there's a positive outcome out of the trade wars between U.S. and China, or are you seeing a lot of hesitancy?
It's interesting. People that I've had on my show and other traders and investment strategists I speak with, I would say over this week and the past couple of weeks, the tone has become very conciliatory and very, all right, even if we do get something, does that mean that either side is going to adhere to it? I think also when you factor in U.S. geopolitical tensions and what's happening in Turkey this week, it's really hard to trust what the policy is out of this administration. So it's been very conciliatory. There is not much confidence in that, and that's a concern. And this is why we're not seeing investment into infrastructure, investments into R&D, investments into building up companies. Share buybacks might help share price, but that certainly is not investing into growth. And I think until we get that clarity around trade policy, that's going to be the environment. And that's why I think the quarter we're coming into for earnings, starting in earnest next week, is going to be challenging.
Yeah. And how about with Brexit? Because that's coming up pretty soon, and that will be a pretty major deal if that does go through. I know a lot of
Yeah.
businesses are actually already leaving England and going to the Netherlands and all this other stuff. Are you seeing a lot of impact due to Brexit and the looming?
You know what? I'm surprised we've not heard more about that. Certainly, Prime Minister Boris Johnson, he's facing rising pressure from within his party over concerns that there really will be a no deal Brexit. I think everyone involved officially agrees that everyone wants a deal, but it looks like what Brussels is willing to offer, Parliament won't accept, nor will Parliament accept a no deal Brexit. So I really think that it's another geopolitical null set. And that seems to be the name of the game, are these stalemates that are taking place all over the world. And again, that makes it really challenging outside of US and China. The administration has also been turning its sight to the Eurozone. So again, that just lends to more uncertainty. I think adopting this isolationism point of view when it comes to global trade and economy is certainly not helpful. As everyone knows, since the 90s especially, we're very intertwined. And I think that's what makes it really challenging for technology companies. That's why we're seeing the swings in the NASDAQ 100, the NDX, where it'll either outperform or underperform one day, just because of the exposure that a lot of these companies have on a global basis.
Yeah, yeah. Well, it's a crazy world right now. So there's so many different things going on at the moment. It's amazing how much of an impact it's having.
But I will also say, I had Jeff Schultz on this week. He's the investment strategist for ClearBridge Investments, a large money manager, and they follow something month to month. They have the proprietary risk recession indicator.
Sure.
And this is the first time that usually green, so it's green, yellow, or red.
Yeah.
I wish I had a chart to share. I don't have it up now, but it has been in the green, meaning that recession is unlikely. This is the first
Right.
month that it moved to yellow due to other factors in these 12 indicators that they follow. So they are putting a 50-50 chance on it. Again, you don't know you're into a recession until you're actually in it, because you do need 2 quarters of negative growth. But the fact of the matter is, global growth is slowing, and that has been the theme over the past year. So for larger, longer term money managers, they have been preparing for a slowing but growing environment. I just think that when you get these headlines of ISM manufacturing and anything that looks slightly negative to the consumer is really going to send some jolts through. So the question becomes, is bad news good news? Because the weaker the data, does that make the Fed and other global central banks more accommodative?
Yeah.
And we saw this happen, I would say, earlier to midway through with the financial crisis, and where for a period of time, bad news was good news because it kept the Fed accommodative. Other global central banks followed suit. They were clearly expanding the balance sheet. It remains to be seen if they will do that again. So, we saw the Fed funds rate projections certainly move higher after Chairman Powell was speaking earlier this week. So it seems to be a lock that we'll get another cut in October. But I think listening to the language, listening to the press conference, how they're looking at the economy and the global economy and exactly how accommodated they're going to get with the balance sheet is going to be key, because do we follow suit and have negative interest rates as well? We can only cut so much. So I think really balance sheet expansion for them is going to be key when we have the press conference on October 30th.
Okay.
A lot to take in.
A lot to take in. Absolutely. So we'll look this week, for week 5, which is September 30th through October 4th. And as Jill and I both noticed, we once again have the same top 3 stocks that are being traded. Again, we have Yuma. Now, there's been some new news. Selling pressure has been coming to an end because a hammer chart pattern report came out, which signaled that the stock was nearing a bottom. And they have now made the Zacks rank number 2, suggesting that it's going to have a breakout soon. So that's been going on. Then we have MNK, and as we talked about last time, they had a looming, I believe it was a lawsuit. Yes, so just on the 1st of October, they did have positive top-line findings that assessed that the treatment patterns and the response to the Acthar gel in treating multiple sclerosis is positive. So they went up 7%, the shares did, after that announcement. Then again, the only different one that we have this week is AMD. and they broke their 10-day decline and bounced back on the 3rd after rumors of an AMD-powered Microsoft laptop came true. This is their first ever 15-inch Microsoft Surface laptop powered with AMD Surface Edition processors, and a significant multi-year co-engineering program between AMD and Microsoft has made that bloom as well. Then the other three that were quite popular were MU and Cloudera, or CLDR, and NTGN. The one thing that I thought was interesting is that all three top stocks traded in the competition this week 5. None of the top 10 traders actually traded any of these stocks. So I wanted to know if you had any thoughts on that, Jill, as to why these are the top traded stocks and the top 10 traders are not trading them.
Well, there's a couple of thoughts around that. I'm not surprised to see AMD, Micron, and the other semiconductor names be widely traded. Again, there was data out there this week. Micron, out of all the NASDAQ 100 stocks, is the most heavily traded in terms of volume. And of course, they're going to be predisposed to movement in China-US trade talks. I think one of the reasons the top 10 traders might not have been involved, and with newer traders in this competition, they might be sticking with stocks that they know.
Yes.
And the other traders have moved on to different opportunities, which is fine, because I know the conversation that we had last week with the other two traders, they were looking to learn from their experiences and kind of perfect their trading plans. So they might be sticking to the same names just because they understand those stocks. And that's true with a lot of traders. Some of them don't trade just what's
hot at the moment,
the momentum cycle that day or the news cycle. They just trade what they know, which is absolutely fine. So I have
smart,
that's why you continue to see those names in the top 10. I did notice that some of the volatility products like TVIX and VXX dropped off, which is a little bit surprising considering the intraday volatility that we've seen. I think weeks 3 and 4, TVIX and VXX are certainly in the top 10, so I'm surprised to see that drop off. But I think a lot of it is just sticking to what you know, which is not a bad strategy, especially names that do have the volume and the liquidity.
Yes, yeah, that is a good strategy. Yeah, I suppose those traders, some of the traders that have dropped out are ones that have gone with stocks that they did not know and then put a whole lot into it and just lost all their equity and, are out. So,
Oh, that's tough.
Yeah.
I think what it is too, there is a lot of noise in the marketplace. There's a lot of data coming at you. There are a number of trade rooms out there. There's so much out there on Twitter and social media that sometimes by the time you actually get to it, and these professional day traders have cycled through the move, you could be at the tail end of it, right? So I think again, for newer traders, pick out your bucket of 10 to 15 stocks that you're willing to do the fundamental research on, willing to do the technical research on, kind of test your theories from there, trying to do what happens day to day, what you might see trending on Twitter or whatever chat rooms that you're in. It's challenging. You kind of need to start to run before you walk and hit singles and doubles before trying to play with the big boys. And there's absolutely nothing wrong with that. It does take time to develop a trading plan, and that's something that is evolving. It will always evolve to the day you hang up, your laptop.
Yeah, I think that's a good point to pick, 10, 15 stocks you want to trade, and you have to filter out too those, that have big gap ups or gap downs, and filter out those that are, showing those high volumes because of institutional trading, as opposed to something that's happening in the news or what have you. So doing your due diligence and paying attention in the pre-market hours and the chat rooms and Twitter and social media, as you said, is very helpful. Using the scanners.
Yeah. Even look at what happened last night in the overnight with, we had negative China trade headlines. The tweet comes out. I think there was a 1% move that occurred just in a span of 4 or 5 hours in the futures market, at least 4 or 5 times.
Wow.
So, yeah, it was, you could be positioned great if you're on the short side and you wake up in the morning and we're green again, right? So, the moves have been pretty extreme. Pre and post market trading is challenging, and it's a very algo-driven market. So, like I said, I think it's key to get a basket of stocks that you understand, just so you can see the pattern in how they trade.
Yeah, and like you're saying, as opposed to going, with long-term investments, if you are, kind of a day trader or swing trader, active trader, maybe it's safest to close your positions at the end of the day as opposed to holding on to them, especially with things that are volatile like these futures. and such, correct?
Yeah, that's correct. And I also noticed that Best 120, who was the top trader this week, he's also an options trader.
Yes, he is.
I think we spoke about this last week too, with having people understand the options market more. When you enter an options trade, your risk is clearly defined depending on the strategy that you take. I noticed that I think he trades weekly
Apple.
options.
Yep, right here, Apple. And
That's 120. That he trades weekly Apple options. Again, when you have a smaller account and once you understand leverage and the mechanics behind options, that also allows you to participate in these names that trade $100, $200. Not to say that they're expensive from a valuation basis, but they are capital intensive. So that's why ETFs are very popular, because you can get a basket of stocks that you necessarily couldn't replicate an ETF or an index. So that's why ETFs are popular, why options are popular, so that you can participate in the move and utilize that leverage,
Yeah.
a more clearly risk-defined strategy. So it's not surprising to me to see that you had an options trader, best out the competition this week. I would imagine as these competitions evolve, you'll start to see more of that as well.
yeah, and it's interesting when you look at his chart here, because he really only traded on maybe one day, and that's pretty much it. It looks like it was the first week, but clearly I guess he made enough of a profit that he's back up on top in week 5. And then, so then Best 241, he was in first place for the first several weeks, as we saw. He's now in second, so that's not bad. And he's an active trader. He's trading on a more consistent basis, as we see here, which is also good. We like to see that. He is heavy in, looks like IMMU, OSTX, CARB, and UMA. Also, so he's the only one who did actually trade in UMA. And then we have Best 115, and he's new to the leaderboard. He's also an active trader. And he made just a few trades in week 4 in DUST and TVIX, as you were talking about.
And it's not surprising to see that he moved up the ranks to number 3 again. TVIX being a volatility product that's great for intraday trading if you have the experience in it. We certainly had the volatility over the past couple of weeks. Dust and Nugget, those are gold related ETFs, and if I remember correctly, they're levered. So depending on which side of the trade he was on, I would imagine he was long.
Yeah.
They've been great trading vehicles, but again, it seems as if he has the experience, because those, I think Dust and Nugget are levered and TVIX is certainly levered.
Okay, that's interesting to know. And let's take a look here. We have Best 223 again. Best 223 is Sanchit, who we interviewed last week. And he was in second place. Now he's in 4th. But that's okay. There's still another week to go. Sorta. Well, about 4 or 5 days or so. And he has consistently remained in the top 10. So he does seem to be taking it very seriously. He's trying to treat this as though he was using real money, as he was saying, and practicing to go live. So that's a very good learning experience, being in the competition. And we have Best 250, who has remained in 5th place consistently. And Best 147, who also has remained in 6th place.
Yeah, it looks like Best 147 for what I can see trade Roku, Nike, and Fran. Though it sounds like he's a very new trader, since they were at the forefront.
Yeah.
Over the past week.
Yeah. So he's also an options trader, correct?
Oh yeah.
Yeah. So that's good to see. Okay. Well, I think that pretty much covers it. Is there anything else that you would like to add, or anything else that's been of interest? I think so too. So once again, it was such a pleasure having you, Jill. Always is. And if you would like to join our live stream and participate in our recap next week, please feel free to email us at info@onebesttrader.com. And again, the trading competition will end on October 15th at 4 p.m. sharp. So you have to close out all positions by 4 p.m. And that is about it. Well, Jill, it was fabulous having you on.
All right.
And great talking to you. Thank you so much. And we will see you Tuesday.
All right, thanks, guys.
Okay, bye, Jill.